Dump gold now. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, we're seeing an ominous sign in the price chart of gold that says the big money is dumping the metal. We'll show you just how low we think price of gold can go. But before we get to that, we're going to take a look at the machine positioning across the broad market to determine if the late last week move higher in equities was just a fake out or if it's a legit breakout. And the bond market, we're seeing a shift in the pattern there, suggesting a major reversal. Big bottom is forming and a big move is coming to the upside. We'll take a look at what's happening in the bond market, and can the dollar be the end all of gold this week? Well, we're going to take a look at just how high we think the dollar can go and why that's bullish for the metal and the miners. Let's over to Goldman, where we start today's show out, where we look at how the machines are positioned, and there hasn't been a big change because we noted in last week's show, we talked about how the machines were setting up over a 1 month period to sell, and over the last week, they were really going to go into a neutral position. They're just going to start holding, and now Goldman's telling they're going to be holding next week as well. As we see on this chart, they're not even giving us any numbers because they said there's no need. You can see that even if the market rallies here, these three lines, the blue, the green, and the red, that the CTAs are maxed out in their position. The only move you're going to see is if they sell. Now, if you're new to the show and you're wondering, what are these CTAs? What are we talking about here? Is these are momentum traded machines. They just move on price level. The problem is they trade large amounts of money, and that alone, when they move to buy or move to sell, they can outright move in the market. Now let's look at last week here. And what we can note over the last 1 month, even an uptape, only $30.9 billion to buy in global equities, not just the S&P. That's $8.2 billion out of the S&P, suggesting they are already at near max position. But notably, over a month, if stocks start to sell, these things are going to try to lock in their gains and be big sellers to the downside. That's not happening this week unless there's a big move to the downside. But what I want to show you here is on this chart again from last week, going back to the last year, that CTAs, risk parity, and vol control funds, these are all formula-based algorithm momentum funds, are at very high positions relative to their historical norm. So what we're seeing is they bought into this market a big way, and now they're looking for retail, institutional, well, anybody, whether share buybacks, drive the market higher. That's what they're looking to do. Let's take a look at their shorter term window here, and what we see, 42.50 to buy, under 41.50 to sell. And of course, now we're adding TD Securities model. We're hearing nothing from Nomura this week because, well, there's nothing to say. As we've noted, the machines are maxed out. But let's take a look at what we talked about last week on the S&P 500. Momentum remains positive. The RSI is at 60. It's not at overbought territory. The MACD, or moving average convergence divergence, we have a nice positive cross. Momentum Timer Pro, after picking up a little sell signal in the midweek, has nice 3 daily buy signals. We've gone back to March 30th, put a buy it open. Last week we told you, remember, we said, hey, we tighten up your stop losses here. There's a potential this thing doesn't break out. If it doesn't, wanted to see it capture as much of those gains you had. And if it does, you weren't at any risk of missing out. Sure enough, the market broke out to the upside. So if we put a line through that you don't really need to worry about your stops. Just leave them where you had them. We have Friday's closing at 418, upside target now 432 on SPY. Downside target remains the 50-day moving average. Now below here, you're seeing our mimic of the CTA model. We noted on the short-term algorithm, it's flipped back. It was slowing down. It's telling you to hold on to some of those gains. Now it's accelerating to buy to the upside, telling us where the market is moving. Our Momentum Timer Pro report was steady on this, continuing to note the momentum over a 1, 3, and 6 month period. We're already up there. So you see both reports telling us everything we needed to know positioning wise. Remember, you can get a 30-day free trial. Sign up in the links below. Plus, if you check it out, you can access all the video guidebooks without signing up, give you a preview of how the reports work. You see, we've done a lot of work to make sure these machine positioning models are accurate and on a historical basis, even better than the actual machines trade. So you know when you're at extreme highs and extreme lows. But let's take a look at the S&P 500 here, symbol SPY. We've been looking at this chart for a while, suggesting that the neckline of this head, inverse head, here's a head, left shoulder, right shoulder, there's another left shoulder, another right shoulder. You break out over this right here around 416.83 or thereabouts. You have now potential move to the upside. We're saying the next move is right up here around 432. You see the recent top. You see these other parts here. Well, this is what you call support, where price comes down. Support then becomes resistance to the upside. We say that's the first move, potentially now all the way up to 450. You'll note we have momentum. RSI's up. MACD's got that positive cross. It's above every major moving average. You've got 2-year volume support beneath. Look at the 6-month window here. Notably, the sellers didn't defend, buyers breaking out. We think this thing's got some legs to run to the upside here. And again, that's what our reports are helping you tell you, and know that you don't have to worry when you know how the machines are positioned. Let's take a look at tech stocks. Now, remember, a lot of corporate share buybacks focused on tech. We've said this thing's got some upside, and sure enough, if Friday closed at 336, we said the upside target was 334 last week. We hit that one on the bell. Upside now 348 on QQQ, downside at 322, the 21-day moving average. We're now suggesting you tighten up your stops a little bit here. I'm going to show you why. Remember, our models are now showing we're at historical extreme longs on our CTA positioning. Doesn't mean it can't go higher, just says warning sign here. Look, we are at a position where this price move is at historical highs in that range where you want to start locking in your gains. That's what the reports are telling you. That's a good thing. So, because not many people always know where to hold here, and now you have a report that's telling you everything you need to know. Here's that move on QQQ. We said, look, watch this breakout. There it is, right up into the supply zone. Now, how do you know that? See, we have this volume profile turned on. This is telling us this is where some shares were last traded, right in this zone. We think we got a little more move into this range. That's why we're suggesting that the last time we've gotten up here, this is where the sellers were at. So the sellers didn't defend here. You know, think of this. The attackers broke through the wall of defense. Now they're moving up to the next line. This is where the sellers have been. This is why we're suggesting, hey, you need to tighten up your stop losses here. If you made some money on this rally, grab onto it. The RSI is now overbought. MACD's not there yet, but it's still moving higher. Again, potential leg up here, but do what you can to capture those gains that you've put in your and put them in your pocket. We now know we had a buy it open on 315. Tighten those stops up. All our models saying momentum is stretched here. You need to hold on to that. How about the bond market? Well, we're shifting gears here. We've got some updates under 3.5% on the 10-year on the T-note that tells you that machines are going to be buying if interest rates go down. Over 3.8 to sell on the 10-year, meaning they become sellers over 3.8%. All that's to say right now when we look at the positioning, kind of in a dead zone. They've been selling down here as we'll look at the price chart, but now they're starting to hold. But over the last week, we've been talking about this triangle pattern, and now what we're seeing is something new form. And that's the thing about tactical analysis. When you look at the charts, just because your initial view of something says, I know this is what it is, well, over time, charts can morph, patterns can morph, and what we're seeing is that is exactly what's happening in the bond market. The rectangle is a reversal. We now come in our study of patterns which form at reversals of price trends and formations that bear no pictorial resemblance to anything we've studied. This is called a rectangle because it's a pattern of fluctuations between two fairly horizontal lines that are defined as appearance of a geometrical rectangle. And this happens over a period of time, and what you can note is a period of what you see as a rectangle can be seen as a reversal pattern, and what you're looking at is a breakout on with volume at the end of the pattern. And so why rectangles form is that people get bored. They start to think, well, this isn't going to break out. It's not breaking down. They start to lose interest. Volume starts to taper off. The big money's accumulating. The next thing you know, they come in and buy a whole bunch, drive prices upside out of the rectangle. Let's take a look at our screens first. And what do we know? Momentum is negative, no surprise. We've seen all last week, particularly in pre-markets, which is a considerably notable of a machine selling that they've been dropping price down. RSI now near oversold condition. MACD negative cross. Momentum Timer Pro had you. If you were watching this and you're a subscriber, you already knew the price was heading down. It gave you some warning. We're still sticking to our buy it open just because we like the fact that the yield curve is steepening here. And I'll show you this price chart can move very quickly. We're going to adjust our upside target down a little bit, our downside target down a little bit. And nobody look at our CTA program. We talk about, how do you know to find things that are low? Well, here's it telling you. It's telling you on our fast algorithm. This is a shorter term algorithm right here, minus 100% short. It's sold down here. It's telling our slow algorithm, where a lot of money in these machines are traded, are at minus 55%. When you see this, it doesn't mean, hey, run out and buy. What it's telling you is, look, based on all the historical positioning of TLT in this case, you're seeing something near historical extreme lows. Draw that bell curve. You're out on that end of that bell curve. So you should be putting this on your watch list, looking for a reversal. We put this note out in our weekend watch list for our clients or subscribers to CTA-Timer Pro. Again, link in the description. It's $30 a month. And we can note that, of course, we have extreme sell max position on the 1 month. So our 1 month signal on Momentum Timer Pro flagged it. Our 3 month window on it flagged it. Everything we had was telling you the price was coming down on this. Let's take a look at TLT, because it's maybe down this week, but it's not out. And I want you to see this rectangle pattern, because prices come down. You have not what is a beautiful double bottom, because it didn't happen the same level. You had a higher low established, price thrust out of that, and then went into this rectangle. So this rectangle is telling you the price is looking as a reversal. You see this pattern here is consistent with a reversal. And why do you see that? Here's what I want you to understand. Think of this, the big money's accumulating on the bottom side here, as the other money, the hot money, is exiting, selling, shorting on the top end of these positions. And once the sellers are exhausted, the big money's accumulated their position, break out to the upside. So let's zoom in here and see exactly what this rectangle looks like. And notably, you got the 1 year volume profile turned on. You see this red bar, that's where most of the shares are traded. You see the RSI's near oversold position. MACD momentum kind of slid down, but price really accelerated. So what you note, though, you see price came up, hit the top end of the rectangle, bottom end, top end, top end, bottom, bottom, top, top. And it came coming down here, kind of this river type pattern, coming down here to the bottom again. So a little more downside potential here. But if you get a reversal off of this and a break above that volume profile line, then it validates this is a reversal pattern in bonds. And we can see that, again, based on what we know in the yield curve. Now let's talk about gold, because we're seeing, again, we've talked about how price was likely to come down. 100 ounce from the top here is moving down. I want you to see the big money is selling. Now, some of you said, hey, you're telling people to sell all their gold. Look, I'm talking about your speculative gold, your trading gold. I'm not talking about your physical metal that you have at home in your safe or wherever you have it. Look, if you own physical metal, that's great. You own it for a different reason. We're talking about trading perspective here, my friends, and that's what I need you to see this as. Let's go back and take a look at our screens on this, because we've noted over the last several weeks, there is a massive triple top in gold, and that is usually a resistance pattern, because when the attackers come up to that line, they lose once, they lose twice, they lose a third time. Defenders hold supreme, drive prices down, attackers give up. That's what you're seeing going on here. And look at this. We told you price was coming down. We said, look, momentum's falling. Many of you said, no way, man, no way. This thing can only go higher. Look at the RSI. You're talking oversold condition, MACD negative cross, Momentum Timer Pro, 4 consecutive daily sell signals. So I told you 4 days ago to start to lock in your positions. We've been telling you, look for a short opportunity here. And now we're revising our downside target to 178.07. Notably, we hit it last week, Friday's close, almost matching our downside target. Our CTA model was telling you to sell on the short, on the fast part, on the long part. Momentum Timer Pro was telling you, we're telling you in every possible way, you need to lock in those gains. And now let's take a look at GLD. And what do we see here? Here's that. See that volume profile line? Now we're at the 1 year chart. Sellers, more sellers right up here than anywhere else in the last year. Let's look at 6 months. You see it. That's what we're telling you. The big money is exiting their positions. And as we've noted, we can see that anytime you got this big army attacking, defenders hold, army attacking, defenders hold, army attacking, defenders hold, hold, price comes down. Whereas the next likely target, that 100-day moving average, let's look at gold futures here. Our claim has been around 1920, 100 ounce off that peak. From there, if it doesn't hold, oftentimes it does have a bounce back, bounce up to about 1947. You'll see potential move there. After that, you're talking this thing could drop down to 1800. I know some of you are saying right now, it's Steve, if it gets down there, I'm going to be a buyer. Hey, and that is great. We're just telling you from a trading perspective, the direction for gold now, most likely lower, not higher. And we talked about this in the miners too. We've been talking about that double top pattern, even though it could be construed as a reversal, that oftentimes it leads to new highs coming out of it. What do we see? Momentum is negative on GDX. RSI is at 39. MACD's got the negative cross. We're revising our downside target because we hit it. Friday close, 32.16, right at 32.16. How about that? Our CTA program told you. Our Momentum Timer program told you. We told you, hey, this price is coming down here. And many people said, no way. But let's take a look at that chart. Where do we think this thing is indeed headed? We're saying 29.92 on GDX. Let's zoom in, and what do we see here? There's that double top. Prices come down. We said it would. Came down here. Now we're suggesting that if that does not hold, and it needs to, what do we say? 29.92. That means potential move all the way down here now into where this volume is at. This is where buyers were at before. So if price does not start firming up very quickly early next week, look for a move lower in GDX. And what could be a catalyst of that, my friends, you wonder? Well, could be the dollar. Let's take a look at what's going on with UUP here, because it's suggesting some more upside move to the dollar, the downside move potential validated in gold. Here we see momentum is positive. We've been telling you about this one too. 24 consecutive daily buy signals. Upside target still remains at the 200-day moving average. What do we note? Our machine positioning model told you a long time ago. Remember, this was minus 100. Minus 100 said, look for a reversal. There it is. It's telling you we're extreme positions. And so many people in the comments said, no way, man. And now look, you see it. Our Momentum Timer Pro, massive amount of buy signals to the upside here. And let's take a look at UUP, and we'll look at the dollar index as well. Here you can see UUP. There's your volume profile. Last 1 year buyers accumulating down here. Upside is the 200-day moving average. Look for resistance to hit there. Because there's not a lot of price movement here, it's not something, unless you're a currency trader, to get you too interested in. But notably, the RSI sitting near overbought territory. The MACD getting up there too. But again, I think there's a potential little higher thrust here in the dollar before you see the next reversal. And when that happens, of course, you know, the bigger trend for the dollar long term is low. We all know that. We've talked about that many times on our regular main show on the Monday through Saturday, talking about how the dollar is likely to head weaker. But from a trading perspective, short term, look for the dollar to at least head higher. There's your bearish case for the metals, potential bearish case for U.S. equities as well. And with that, I'm Steve Van Meter. Thanks for watching. Thanks for being fans. Bye now.